At various points throughout 2024, stock markets around the world reached brand new all-time highs. In the US, Europe, Japan, and even Ireland, equity markets were breaking all-time highs almost on a weekly basis. Now, while there has been a pullback in recent months, markets remain elevated. Thus, the question becomes, is there any point in investing in equity markets, considering the fact that prices have been at all-time highs? If we take the chart here, we can see the price earnings data for some of the key global areas. Price to earnings effectively means the value of a particular stock, sector, or entire index, with a higher PE ratio indicating a more expensive stock or sector. The United States has a price earnings of 24 times and is by far the most expensive geographic area to invest in, and is more expensive now than the rolling 5 or 10-year averages for the US. However, historically speaking, the US has also delivered higher returns than other geographic areas. Now, meanwhile, in Europe and in the UK, both stock markets are relatively cheaper than the US, with price earnings of 15 times and 16 times respectively. This means that stocks and equity indices in Europe and the UK are far cheaper from a price perspective than their counterparts in the US, and thus may provide more value over the long term for investors than equities in the United States. Looking somewhat deeper, here we see the price earnings for the 11 S&P sectors, for which the 500 companies that constitute the S&P 500 are a part of. Currently, the most expensive sector within the index is the information technology sector, which is home to companies such as Nvidia and Apple, with a price earning ratio of 38.05. On the other hand, is the energy sector. It's currently the cheapest, with a PE ratio of 13 times earnings. Some of the companies in this sector include ExxonMobil and Chevron. For more insights such as these, please visit our website, www.csprivate.ie.